All right, here we go. We're back.
Yes,
We
we
are
are.
back. How's it going, Victor? Welcome. Not. I
I'm
mean, welcome to everyone else. But then how. All right, Victor, you just take over. That's the worst intro ever. It's, as you might notice, it's Monday. One of
How are
those
you
Monday
guys
intros.
doing? Yeah, it's the 26th of August. We have a fresh new day and another chance to make this a better intro next time. I mean, that would be for tomorrow, not
Yes.
for today. But yeah, I'm doing fine. I hope you guys, everyone in the audience as well, you enjoyed getting recharged on the weekend. So you hit the charts with a fresh mind, with not with a baggage of anything you had, be it positive or negative, not with that baggage. You start fresh each week, and that is the beauty of every Monday. New opportunities, new time to do it better this time around. And even if you did it good last week, to even do it better, right? That's our goal. You're only competing with yourself,
Yes.
with not with anyone else. So how was your weekend, Jonathan?
My weekend. So, yeah. So, like yesterday, I had troubles. You know, falling asleep because honestly I was thinking like it's insane, like I was thinking about waking up and looking at the charts. Like I was actually thinking about trading. So I'm like, it's Sunday evening and I can't fall asleep because I'm thinking about waking up Monday morning and start trading. That's insane. Before I started trading, it's not like I went to bed on Sunday morning like, oh, I really want to go to work. I really really want to go to work. But this time around, and also the work we're doing here with the 5ers, these live trading rooms, like it's wonderful. Like it really feels like feeling blessed just being able to do something that we're so passionate about, something we love doing, and getting paid for our our doing what we love. I think that's absolutely amazing. And also, I want to thank you all for coming into these live streams. We got a lot of familiar faces right here. We got Andrew. Um, all right, thank you, Andrew. Thank you for that comment. We've got Henry. What's up, Henry? LJ, I don't think I've seen you before, so welcome. Hopefully, you'll stay for the next one. We've got H as well. Hamid or Ahmed. I can't probably completely butchering that pronunciation of that name, like everything else I'm trying to pronounce it. And we've got M76BB. That's our in-house Bitcoin hodler. How's it going, guys? Oh, we got lots of people coming in here. Nice. Amazing. Okay.
Does the
So today,
name mean that, hodler? I don't get. Maybe you guys in between crypto aficionado, you guys have a like a secret code, but I don't. Do you read
yes.
that hodler aspect in that name? Because I don't. M
Yeah,
seventy
no, that's
six
between me and
BB.
him. That's
Oh, okay,
yeah,
okay,
that's
okay.
that's just between me and him. We got this secret code going on. I do these blink twice if so on the live streams I have these secret messages to him when I'm
Yeah, yeah.
talking. Um, so yeah, he's the in-house Bitcoin hodler, and I'm sure he's gonna have a lot of questions on the Bitcoin this live stream as well. All right, so I'm just gonna pull up my screen and just right into the action right away. We got Euro NCD right here. We got Euro NCD. This is a trade that a trade. Okay, thank you. I'll remember that. And now I'm afraid of trying it again. So we got we got Euro NCD here on the daily, and I gotta say, I gotta say, I think emotionally, like before I enter a trade and after I enter a trade, I think about what was I thinking when I entered that trade, and always kind of throughout the trade, I always I try to think about what I was thinking when entering the trade, because it's that reason and that mindset that I have to remember. And on Euro NCD, actually did remember thinking, this is not great. We have a level below here, and I remember thinking like, On the daily, maybe not perfect, maybe not perfect. It did hit the level that I had with my own drawings, but then I added the indicator and I saw this level. I'm like, okay, it's not the perfect level. But then, I'm going into the 4 hour, and I really like the fact that we obviously had the reaction. We kind of front rented this high time frame key level, had a nice reaction for 3-4 hour bullish candles. And it kind of looks like we're going to come up and test this region above. So I decided to go long, and because I had a slight, um, hesitation, I need to take that into account when managing the trade. So what I'm doing now is I'm down on the 15 minute, and I'm basically looking at this trend right here, and I'm trying to remember, like, what did I enter based on? And what I entered based on was, this right here. That candle right here on the 15 minute, this is the trend that I entered. So I think everyone can see that it's an uptrend. And so with the fact that we had the 4 hour bullish reaction, we had a nice uptrend right here. I think everyone can agree that it kind of looks like it wants to perhaps move higher. And then we start to get this. And now I'm thinking, okay, we are seeing a potential break of structure. So if price follows this white line right here, I will get out of this position. There's no point of me holding this, because now the overall idea would seem to be invalidated. And this is where we are trading right now. So we did hold that level as support. And if we can get it pushed to the upside, I will move my stops up. So here I have an alert that says stops up, and here I have an alert which says exit. So we're currently looking at, I would say we're currently looking at a 1.35 R trade with very low risk, because of the fact that I will exit down here. But that stop loss is always a very wide stop loss to leave a lot of room forever if there's increased volatility. And honestly, that's what I'm looking at this week. I have a list of pairs here that I'm watching. We've got Euro CHF, not really that interesting. Euro GBP, can't really, like, I do like the fact that we have some type of area down here that might, I want to see a bounce down here, but that's probably going to come tomorrow or the day after. And then we have Euro AD. Like this, I get a fairly bad read on the market this morning.
Bad read? You say?
What?
You said bad read?
Yeah, like I don't really. Yeah, exactly. That feeling when you watching.
You can't get the market's pulse.
Yeah, and that feeling when you're watching price action and you feel like it's just there's nothing, like, there's just nothing there. It doesn't make sense.
Nothing popping out, right, attacking your attention. Nothing obvious.
Exactly. I think that's the word. Nothing obvious.
Okay.
All right, we got someone here got his first funded account. That's amazing. I hope
such a great feeling when you get to that point where you can see the results of your process paying off, and you get something to show for, right? All the hours, all the days, all the things you didn't do, you sacrifice, to become better a trader. And one of the milestones is, of course, to get the funded account. It's not the only, the journey doesn't end there. But it's certainly a very satisfying moment when you first receive that funded account. And congratulations to NCD Cat Paul for reaching that milestone. Good stuff.
Yeah, I mean, I would say that the journey kind of starts when you get funded. I think that's when the whole journey starts. And also, I think a lot of people realize that now the real problems appear, like,
yes,
because a lot of people, they get funded and then they fail to hold on to that account. It's very common that we have a lot of traders, they trade well during evaluation, or they have a specific way of trading just to pass the evaluation phase, and then they realize that same approach does not work on a funded account. And I think so it's very important that you stick to what you know when you trade the same approach in evaluation as funding, and perhaps even when you get funded, you should lower your risk, at least in the beginning. I think it's super important to really lower your risk in the beginning, because there's more risk to trading than what you're actually putting on the trade. So let's say you're risking 1% per trade, which I think is quite a lot. But let's say you're risking 1% per trade, but then you have to ask yourself, what's the risk here? What's the actual risk of this trade? And if you just got a funded account, there's a lot of added risk that you didn't have before. And that risk is psychological. So that's the risk of you making mental errors because of you are super happy about this certificate and the new funded account. You will most likely be very, it's going to be easy for you to make mental errors.
Yeah, we have another viewer explaining just this issue. When you get that funded account, things suddenly changed, right? The market didn't change, your strategy didn't change, but still, it's something changes because it's not as easy, to pass and get a funded account than to keep that funded account and make the same decision, the same place, being coming from a same mindset um, on when you're funded, because now you have the spotlight on you. It's not easy, and that's something you have to learn, and that's why getting multiple payouts is a milestone in its own, right?
Yeah.
Getting the funded account is good, but to be able to manage your psychological part, your psychology, your mindset, trading funded that's another level. So that's something that needs to be addressed, and you need to be aware of. And what better way to do that than with journaling, by and meditating on, be aware, deliberately having moments in your day to think about how you feel about this account, right? Because this account is
Yeah.
different. So okay, before you start thinking, okay, this is fun. If I make profit here, I will actually receive real hard money. How does that make me feel? When I lose, it will feel you lost real money because it's a funded account. So how does that feel? How should I manage this? How should I approach this? How should I mitigate that feeling going forward? And if you can't, you're gonna fall into that trap of getting the funded account but not being able to get a lot of withdrawals from it, and that's something.
Yeah.
That's another hurdle most, if not all of us, need to go through before you can actually be a profitable, not only profitable as having a profitable system, but a funded profitable trader who is actually getting withdrawals. That's another level. So it's a great thing. I think it's something we need to discuss from time to time, because it's something very, very real, and everyone has to go through it when they get to that point.
Yeah, and there's no shame in like I thought about this. I was out on the walk this morning and thought about this. The fact that we I mean making mistakes. There's a difference between making mistakes and turning these mistakes into a failure. So I don't think we shouldn't view mistakes as something bad. We should view mistakes as a learning experience. But the failure comes from not learning from your mistakes.
Indeed.
So a
Well
lot of
said.
people think about, yes, I think a lot of people think that you're a failure if you make mistakes, but those are completely different things. Like making mistakes is just such a natural part of learning. And I think to become a good trader, you need to be open to learn new things like all the time, every day, because the market can truly do whatever. Like I'm looking at NCD Cat here, so I'm looking at this and I'm thinking, oh, I want to see a bounce here. Now, honestly, I think there's a very high probability that there will be a reaction here. Like we don't know if there's going to be like a reaction like that and then straight down. But I find it now, because we don't have any news event and anything like that, I find it highly unlikely that we're going to get a move straight down here in the 1 hour. But is it possible? Yes, absolutely possible. But if you're not open to the idea of this happening and kind of learning something new about the market, then you'll be very frustrated when or if it happens, All right, we got Fernando in the house. I was actually thinking about you. I was waiting for you. Like we're going through all the names of all the people in here and like talking about how we appreciate you guys. And then I'm like, but where? Where is he? And obviously here it comes. Fernando.
Yeah, Crispus mentioned this quite on the spot, mentioning that
sorry, I'm just removing that comment. You keep adding it, and I keep removing it. Sorry.
yeah, that's the funded euphoria. It's the same as a winning streak euphoria, right? Which is also can be very, if you're not aware of it, where you get overconfident, where you think you're invincible from a winning streak. It's the same thing with funded. Actually, anything that is very positive, that makes you feel very positive, can give you that euphoria and cause you to be less respectful of the risk. And that's basically what happens. You become less respectful. You think, you don't have to pay as much attention to your risk management, to your rules, and you start getting sloppy. And then, you will get humbled, and either you fail to learn from those mistakes, or you keep on making them, and eventually you lose the account, or you hit some kind of limit that invalidates the account. So I think that's very real. I think this viewer hit it on the nail on the head. And Haresh also mentioning something that you get impatient, and that's different. That's not euphoric necessarily, but you get impatient because you're getting closer to that money, right? That those withdrawals, because you think, okay, I can actually use this money for something real. This is no longer a plan, something in the future. No, this could be next week. This could be today. I could be withdrawing some kind of money. When it gets to that much closer, we tend to forget how we got to that place, and we get impatient. Let's just take that shortcut, and let's make some money today. And forgetting, if you start forgetting how you got to that place, the consistency, the discipline, the rules you have in place, then you probably will not be able to, you won't have a positive outcome of that shortcut. In general, in trader, and I believe in life as well, there are no real shortcuts. They come at a cost always. It's, you may be able to utilize a shortcut, and it may give you what you want one time or maybe two times, but it's not something that's going to be consistently there. Otherwise, it would be part of your strategy, right? The fact that it's a shortcut already means that you're leaving something necessary behind, and thinking you can hack the system. Doesn't work like that. So I think that impatience is crucial. If being patient is what got you to the funded account, what do you think? It's probably going to take you the same patience or even more for you to get those withdrawals, not being less patient about it.
Andre, I would love for you to kind of like explain what you think happened, because that could be a great learning exercise. And if you want to write that out in the chat, that's amazing if you could, but you don't have to. But I think if you sit down a pen and paper and just put it all out there, why do you think that happened from a systematic viewpoint, from a technical viewpoint? Was there anything wrong with your technical analysis or trading, or is it purely mental? Like getting that out on paper, and I'm not talking about like on a keyboard, but actually writing it with a pen and paper. Research has shown that we learn quite a lot better with actually writing it down on pen and paper. So that could be a really good learning experience, because you get to understand, like, losing an account that's a big mistake, but it doesn't have to be a failure. So it's a big thing. And when I say it's a big mistake, that means there's a lot of things in there. There's a lot of information packed within that mistake. And because if you can figure out what made you lose that account, if you can stop doing that, maybe you'll never lose another account again. So look into that mistake, like really, really look hard. Drawdown depression. This is real. This is something that we don't talk a lot about, but trading it's just such an emotional roller coaster, And when you're in drawdown, it's it can be, for some people, truly depressive. I really think it can, because imagine if you're I mean, imagine you get funded and you start thinking about your new future of making more money and having more freedom, and then you have a drawdown, and that drawdown just seems to be getting deeper and deeper and deeper, and then you start thinking about like, am I even profitable? Like, am I ever going to be profitable? Am I going to lose this funded account? Like, what's my future looking like? Do I have to, you know, maybe I can't, trade full time. Maybe this is just not for me. Maybe I have to give up. Those types of thoughts can absolutely lead to depression, I'm sure. And I think,
What's
I
your
think
way
that
to deal with that? How do you deal with that?
my way, so my way is man, I love a challenge. I love when things get tough. When I think I really thrive when as the underdog, right? So when I'm in a situation of drawdown, it's like for me, I'm just hardcore going into the details, looking at the statistics, doing back testing. Like I'm working 24/7 if things aren't going well until they start going well. But I think that's dangerous, right? Because I'm actually not very consistent in that way. Like I think I'm treating better in drawdown than I am when not in drawdown, which kind of creates a cycle, a negative cycle, like a loop where it's like, okay, go into drawdown, trade very well, and then in profit, start feeling well, and then back into drawdown. So my goal has always been to be balanced, like mentally balanced and balanced with my consistency as well. But the way I try to deal with the negative emotions that comes with drawdown is it's a tough one, but it's basically how do you deal with any type of struggles in life, I think it's important to perhaps take a break. If you need to take a break, you probably should, and then take a step back and look at the situation from the outside, and start having a more of a unbiased perspective on what's actually happening. Why are you in the drawdown? Are you in the drawdown because your system is in a drawdown? Then that's completely fine, and you should be almost happy to be in that drawdown, because it means that when you're out of that
You're
drawdown,
following.
it's gonna take a while for it to come back. But if you're in the drawdown because of making mistakes, then you have to start thinking about those mistakes. And if it gets to the point where you start feeling almost depressed, well, first of all, I got to say, like, if you're feeling very bad, then probably seek professional help. But um, take a break, take a step back, start viewing the situation from the outside, from an unbiased perspective. Um, and don't think too much about the negative aspects of it. Like, I think I read somewhere that the more if you're feeling down, the more you talk about it, and the more you think about it, it's almost like the worse it's going to get. So you kind of have to step out of it, and start thinking positively. And even if you're not feeling positive, you have to start thinking, like, forcing yourself to smile and be positive. I think those things like that will really help. But this is a huge problem, and it's not something that we should just ignore. It's a real problem in trading, and I would say it's one of the biggest problems in trading. This is a game of, like, it's an emotional game, an
I,
emotional roller coaster.
I think it goes hand in hand. It's part of becoming, emotionally adult, or as you grow as a person, you need to be able to watch and observe yourself as it is in reality. So let's say you made a mistake, you find out that it's not your system has a drawdown. No, you made a mistake. You took a signal. You didn't wait. You were impatient. You were revenge trading, whatever. And it's I think it's very helpful to be aware, to be critical, self-critical. Be critical of yourself. However, you should not marinate in self-condemnation, right? and bring yourself down and judging yourself too hard. But you need to be able to identify where's the error here. Is it something is it a system? And you need to, okay, why did I do that? And all of that is fine, but at a certain moment you need to have the awareness so that you can observe the judgment without judging yourself, right? So it's kind of difficult, but since we don't have a boss to do this for us, we need to do this all the time. So but you have to be the boss or the manager and spot the error and say, you didn't do this right, you made this error, you make notes of it, but then you take a step away and you say, okay, I did an error, that's it. It doesn't make me a bad trader, right? It's only one error. If I fix this, then I can continue and it's going to be fine. But if you start marinating in that judgment and you start thinking, no, I made a mistake, I did a mistake again, I may be doing it tomorrow again, this is not going to work, that's that negative spiral that you need to watch out for. But naming the animal by its name, the error by what it is, it's an error, and identifying what the cause is and think up ways how to deal with it is very crucial for you to correct that error. So that's something you should not avoid. What needs to be avoided is, once that is done, you need to take a step back and just observe that judgment you just did on yourself, and that's it. It's just don't stay in it the whole day. You made an error, you put in some measures to avoid that error in the future, and you move on with without that baggage, that emotional baggage that it doesn't one error doesn't define your identity, right? So you have to be aware how to handle those judgment. It's very important to handle the judgment, but you need to, at the end of that exercise, wash your hands after dealing with that judgment, so you don't walk away with that judgment the rest of the day, because that can cause you negative impact on your how you see yourself, how your self-worth, your identity, and so on. We have let's see, we have a lot of people. This subject is causing a lot of viewers engaging us in the chat, and I like that a lot. When we're hitting those subjects that people they relate to it, they have a similar experience. So it's I think it's very helpful. It shows as well how difficult trading can be, right?
And I think also I like the fact that we're here with Trading Live, and we're able to, at least I'm trying to do that a lot. Like, I'm able to walk you guys through what I'm thinking and what I'm feeling when I'm taking a trade. So I do feel like, especially with this Euro NCD trade here, and last week was profitable. Last week was profitable. The week before, not profitable. The week before was when I made some mental errors, and then last week, the week after that, I took good trades, but I do feel like maybe I think they're good just because they're winners, because I went through them, and I have this feeling that maybe I'll let a good trade become a winner, which is very bad, because if you're rewarded for making bad trades, that will be will not be good. So you have to make sure that you're critical of every trade, even the winners, and maybe even more on the winners, because you need to make sure that the winners are good trades. Because if you're taking a lot of bad trades and you're just lucky, I've seen traders have winning streak of like 10 trades in a row from not following their system. It's pure, I guess there's nothing called, nothing like luck, but I don't know, I would call it luck. Taking trades that are not part of their system, and they're like on 10 trades winning streak for different reasons, and that could be quite bad. So I'm honestly gonna say, like, I'm struggling a bit with this trade right now. But I have my plan, and the plan is, if we break down here, then I will just exit. So if that alert goes off and we perhaps have like a 50-minute candle closing below here, I'm just gonna get out of the trade. I think one of the reasons as well why I'm feeling a bit insecure of this trade is because I've started a couple more challenges, and this is then the first trade based on some of those challenges. And I'm actually doing something interesting here. I have a couple of different challenges where I have different risk, and I also have personal accounts with different risks. And now I'm thinking, like, that big risk per trade. So am I gonna lose that account tomorrow? Things like that.
So it's
So yeah, I
affecting
think
it's affecting you mentally.
it is, and then we have to think about the fact, because NCD Cat, I'm just gonna look here. I'm getting some alerts. Okay, so we're moving lower here for NCD Cat. Maybe we'll have a bounce here. Yeah, and also I have to think about what does this mean? What does it mean? Because most of the time I'm just gonna enter a trade, and then I'll if I'm not doing a live stream, I'm working on something else, but I'm in a position. What I do is I shut down TradingView and I shut down MetaTrader unless I need it for like content creation and stuff like that. And then I just let the trade do whatever it wants, and I let the alerts goes off. So right now I have on TradingView, I have one alert here and then one alert here. And whatever happens between here, like, it doesn't matter. It really doesn't matter, because my plan does not involve price doing something within this boundaries. So if it breaks out, move stops up. If it breaks down, exit the trade. That's the plan. There's no need for me to look at price action. So why am I constantly looking at price action? Because
Yeah.
I'm,
Yeah. Go ahead.
no. So what I'm saying is, the feelings that I'm feeling for this trade might not be as important for this trade as the next trade. So usually what I do is, when I start feeling a little bit stressed or a little bit confused or having like negative feelings for a trade like this one, I start thinking about, okay, so if I can't accept loss of this trade, because that's basically what it is, it's fear and not being able to accept the inevitable loss of this trade that I think we're going to get, then I have to make sure that I understand that going into the next trade. And if I still feel there's a bit like friction for the next trade, then I'll take a break.
Okay.
I'll just have to take a break if this continues. And that's one of my, I think that's one of my strengths. Being able to take breaks when needed, and then come back with a fresh approach and a fresh mindset.
But for you to able to implement that skill, you need to have awareness. You need to be able to be aware and spot when you're getting that difficulty mentally. When is it making you uncomfortable? And knowing that, so for you to say, okay, now is the moment I need to be taking a step back, because this is those moments where I start to trade poorly. I'm going to be watching price action too often. It's going to affect me negatively. So I need to step back. But first, you need to be able to have that awareness, maybe through journaling, maybe through meditation exercises, where you think about, okay, how am I feeling about this trade? Do I feel at ease? Is this healthy anticipation, or is this making me on the edge? Is this making me uncomfortable, so much so that I'm going to be breaking my rules and start intervening, micromanaging, or do whatever that it is that you should not be doing?
So we had yes, moving on here, I changing subject. We got M76 BB here talking about Bitcoin. We did trade Bitcoin over the weekends. I think so. When I get questions like these, I start thinking, what's your system like? What's your approach? Because if you have a system, then you like you probably have, I mean, you're trading, so you probably have a specific trading system or trading approach. Maybe you're trading completely discretionary, but you should still be able to explain it in simple terms in a couple of sentences what that actually means for you. And then I'm hoping that you have a journal, right? And in that journal, you can clearly see what your profitability are or is over the weekends. Okay, if you're not profitable trading weekends, then stop trading weekends, because your system is not optimized for trading weekends. And just like you said, there's lower volatility. I mean, lower volume in the Bitcoin market. The volatility can be quite unpredictable. You'll have some strong moves in either directions over the weekend. So I if I had to choose, then no, I would not be trading Bitcoins or altcoins over the weekend. But the answer to this question lies in your data. I mean, I would love to be able to tell you, yeah, you just don't trade weekends, and you'll be profitable. But that's not how it works. There's a lot of good traders out there trading Bitcoin on
I think I
weekends.
think
So
also it depends on what type of system you have, because I would assume that on the weekends perhaps the price action is different, right? Because simply it's the weekend. So maybe you need to give the market more room to breathe, right? Things like that. So it depends on, and that may be something relevant for someone who is just going for a couple of ticks, than someone who is perhaps day trading or swing trading the asset. There was a comment, and this is so common with with many traders when they start trading. They, when things don't go their way, they think it is, it's the fault, someone is after them, right? Either the market is after them, or the broker is after them, or maybe the prop firm is after them. And of course, leaving the rotten apples in the industry aside, the 5ers wins when you win. So
yeah.
this is how when the prop firm has their interest aligned with yours. So it is best, those are the best I mean, that's the only prop firm you should be trading, the ones that have their interests aligned with, they win when you win. So that's why the 5er has some specific rules, because they want you to win, they want you to win, they need you to win, right, for them to be profitable as a prop firm. So it's and that's something, there was a viewer who mentioned something about trading Bitcoin, and maybe in the weekend it's not as tight with the spreads perhaps, or maybe the price feeds. Those things you need to find out as well. If in your system, if your system is not, if your asset or trading that strategy at a particular broker or prop firm is not profitable, that's a sign you can use going forward, right? Not all price feeds are the same, not all brokers are the same. So you need to adapt, and instead of thinking there is ill intention, just measure your data and conclude if it is profitable or not, trading on the weekend or trading your same system on the weekdays. Just let the data guide you, I would say.
And
That's
also,
the best way.
yeah, and talk about Bitcoin, we had to mention as well. The 5ers has probably, when it comes to the Forex industry, the best trading conditions when it comes to Forex trading on the on MetaTrader with the 5ers. That's because we have the tightest spreads, basically. Then and so fairly low commissions and really, really good spreads. When it comes to Bitcoin, however, with a lot of these, it's CFD trading with Bitcoin, and a lot of these, prop firms offering Bitcoin, it's very difficult to get like super, super good trading conditions with, traditional brokers on Bitcoin. So if you're trading Bitcoin with the 5ers, you probably shouldn't be doing so on the lower time frames, okay? But if you're swing trading, if you're looking at perhaps the 4-hour as confirmation, and you're looking at key levels like I'm doing, then the spreads widening is not really a huge problem for Bitcoin when trading with the 5ers. It's definitely possible. But on the weekends, it's much more unpredictable. So keep that in mind if you're going to be trading Bitcoin with the 5ers. As a scalper, as an intraday trader, and with Bitcoin, maybe you have to really be careful. You have to look at what the conditions say about that. And I think this is a really good question when talking about emotion and talking about trading from that perspective. Is trading with a bot any different? Well, ask yourself this. Okay, you invest a lot of money into a bot. First 5 trades, losers. You're in a drawdown. You're like, well, this sucks. This is a bad investment. You're gonna take your money out. Okay, it's like it's the same thing. Why are you taking that money out? Because you don't like losing money. Nobody likes losing money. If you're going on whatever dashboard you have for whatever bot or meta trader thing that your EA that you're trading, whatever, when that system goes into drawdown, you're going to start thinking, maybe there's something wrong here. Maybe there's something wrong with the algorithm. Maybe there's something wrong in the code here. Maybe I'm never going to get out of this drawdown. You losing money, you still lose money. The difference with the bot is you have no, like, if it's not your bot, you have no control whatsoever. At least when you're making your own mistakes, you can control yourself and monitor yourself. So yes, there is a difference, but it's still not fun trading, losing money, even though you're doing so through a bot or your own discretionary trading. I guess with a bot, you can blame the bot, which is obviously not a good thing. There's this. Oh man, I heard this Chinese, maybe Japanese proverb, really, really good. And now that I said it, I have to actually remember what it was. And I think it's something like this, when someone that just started the journey, they're going to blame others. Or someone, no, this is completely wrong. The man who
maybe
blamed.
the same time. Maybe you take a few minutes to
No,
think
I
about
got it. No, Victor, I got it. So
Okay.
the man who blames others have just started his journey, and the man who blames himself is halfway there, and the man who blames no one has already arrived. And when you think about that in terms of trading, when you first start out trading, you're going to blame everyone else and everything else. You're going to blame the market for taking out your stop loss. You're going to blame the invisible, almighty market makers for, taking out your stop because they know exactly where your stop loss is. And they're like, okay, this is your stop. I'm going to take it out. I'm going to take your money and then I'm going to move to TP. I'm going to, it's not how it works, but you think that's how it works when you're starting out. And then when you've been training for a year, 2 years, maybe you start getting the hang of it, you start blaming yourself. Like, I made this mistake. This is my, and then when you're profitable, when you're making money, when everything's going well, when you're a great trader, you don't blame anyone because you know that as long as you stick with what you're doing, you're going to be profitable. And whatever mistake you do, that's just human nature. We all do mistakes sometimes, but you don't blame anything and anyone. You just continue doing whatever you're doing.
Yeah, I think that's I think that Asian proverb is very deep. You can apply it in real, the rest of your life as well, other aspect of your life as well. Not taking that victim role, because the victim role typically never has a good benefit to you, right? Taking the victim role. So it's much better to just assess the situation and move on to improve things in life. It's very similar as that as well. It's not, who has the fault, who is. It's not about blaming anyone. It's about how do I recognize where I am right now, what happened to me, and how do I get out of this situation. It's something very useful for other aspect as well. Yeah, I think I was going to say something, but in the meantime, let me see. I think I forgot about it. I was going to.
I have a question here. I can answer this one. So timing with my strategy, there's no timing involved. And then your second comment here, like New York opening, not really. Like I do kind of think about it. I've started thinking about it more now. Probably trying that. Like if I'm gonna enter a position, maybe not enter it 5 minutes before New York open. Maybe wait a couple of minutes after to make sure that everything is as it should. But other than that, not really. Don't really care too much about that. Yeah, journaling, super helpful. Do we want to comment on this? Do we feel like are we experts as at macro fundamentals today?
Do we feel that? Well, the thing is, the subject is quite broad, and there is a huge macro at a macro level, but I'm not talking about on the level of a swing trader, not even as a position trader, but I mean on the decades level. There is a process going where you see that before the dollar was the reserve currency by far, and that single reserve currency status is eroding slowly. It is still the case that it is the biggest reserve currency for everyone. However, that status is being eroded, and at certain specific situation, you will see that it is no longer the reserve currency in terms of how between bigger countries like China and I believe Saudi Arabia, they are doing business not in. They have agreed not to do it in dollars anymore, but in their own in yuan or in their some other currency that is not the dollar, and that those are the signs that it is, that status is being eroded. So yes, it is something happening, but it's on a huge decade scale, and still the dollar is king. No question about it. The dollar is king, even as the BRICS is expanding. The reality is that the U.S. influence on the economy, on the world economy, is still by far the biggest, and that's going to be like that for a long time still. But there is that, uh, you know, it's the same with demographics, right? When you see it, when you analyze demographics of a population, it's not something that happens in 1 year. Where you see, let's say on one country you have uh, when you have the age demographic or age distribution of a population, you see that certain countries have a bigger portion of their population being younger. But that is a process that doesn't change in 5 years or a couple of years. It takes generations sometimes for it to form, and that kind of speed you need to think about, and maybe even longer. So yes, it is a fair point. But we're talking about future, not in 5 to 10 years, but perhaps in, I don't know, 100 years. And you can also see that in the rise of different civilizations, right? We're talking about hundreds of years. Who was, the superpower 300 years ago and before that? And you see that kind of speed we're talking about, where there is one rise of one superpower, the Romans, the Greeks, etc., and it goes on for hundreds of years. And we're currently in and you can there's Dalio, the great investor, talks about these subjects, how the rise and fall of different superpowers, and in that sense, yes, the dollar reserve currency is in a process of erosion, but it's not something that I think you or anyone should be, as a trader, shouldn't be very concerned about. Right now, it's not something that's going to affect you this year and next year, and not even for the coming 5 or 10 years.
I do think, though, it long term, looking at investment strategies long term, I think something like that could be very beneficial for Bitcoin, actually, because we're I think a situation like that would open up for alternatives. It would leave gaps for things like Bitcoin. So I think a scenario like that could be very beneficial for Bitcoin. I think people would actually look at Bitcoin as an alternative. But yeah, let's
Yes, I was going to say, before we move on, let's make perhaps one or two steps back. There was that person who asked, bot versus manual trading. And by manual, I mean you actually putting on the trades instead of having an automated system do it for you. It's different. My take on it is different. With the bot, you will have perfect execution in the sense that the bot will do exactly what it's supposed to do, leaving aside whether that's the right thing to do. But I mean, the execution of the plan with the bot, unless you have bugs in the code, of course, will be will be perfect. And that is a great advantage against a manual trader who it will never be perfect. It will try to be as close as possible to perfection, but you, as humans, you will always be vulnerable for some kind of error, for delays and things like that. But the other thing is you still have to manage those bots. And what you mentioned is quite to the point, that if you're in a drawdown, it's already, and you're trading manually your own system, it's already difficult to have confidence going forward. You have to practice knowing your data, knowing what is normal for your strategy, and you can stick to the plan even though you're losing day after day. But try doing that with a bot where you don't have don't have that that logic perhaps after the behind the dot the bot. It's almost impossible. I mean, you're not going to be patient with the bot, so you will be intervening, but maybe intervening is exactly what you should be doing, right? Because so it opens up the door for other kinds of error, other kinds of mismanagement, and other kinds of so it's still difficult. I wouldn't say it's necessarily better. I would argue the best thing is to have a hybrid system. If you are already, your system inside out, try to automate part of it, um, as far as possible, as much as possible, I should say. When you do that, but you're still at the helm of the process, you have both, the best of both worlds. Well, the execution of either the trade, when to close it, or how to enter, is done by a bot where the execution is perfect, but you are still there, human, intervening. The logic behind it. That, I think that's where we should be. That's the sweet spot. But both of them has their own advantages and disadvantages. None of them is. I mean, of course, I'm biased because I'm a manual trader. I don't trade with automated system, like complete automated system. So I would think I would like to be in control. So yeah, but that's a bias, I think, of you. I think both of them has their own difficulties as a trader.
Yeah, and I think we as traders, I mean, when we have if we have like a systematic, if we have a system where with indicators and things, and we're getting signals, like we don't have to have indicators, but as long as we know what we're looking for, we know what a specific entry trigger is, that's a system, that's a trading system in of itself. So basically what a bot is doing is just taking every single system and then having built-in management, like stop loss and all of that. But I think like you said, finding that balance, you have a specific approach. Maybe like I have my indicator, right, where I get the signals, right, and then I have the signals gets forwarded to me. Okay, let me just go to Euro NCD. Looks like I'm breaking down here. Okay,
You got a
where is
signal?
it? No, I'm breaking down a Euro NCD, so I'm going to be exiting this one. Just have to log into the actual account because it's breaking down now, and it's about to print a 4-hour bearish engulfing candle. So we can look at right here. You see on the 4-hour, it's printing a massive candle, and I found this level actually after entering the trade. So that's I'm going to exit that one.
That's Euro NCD, right?
Yeah, so I'm just out of Euro NCD here, and as you can see, in 4 minutes, it's going to print that bearish engulfing candle. And when I added this level, obviously it looks like a rejection right on that level. So I think the fact that I did feel a little bit confused about this trade was one of the reasons why I'm exiting earlier now and not letting that stop loss hit. I'm exiting earlier than what I planned. And also looking back at this, probably shouldn't have entered the trade at all. But now that we have, so euro is going lower, there's definitely some weakness in the euro. You can see that most of the euro pairs are moving lower. There is not a lot of strength from the New Zealand dollar, but on NCD Cat, we are getting that bounce inside this area right here. So what I'm gonna do is, we have the 1 hour right here. Let's see on the 4 hour. So I'm gonna wait for some type of move like this, and then I'll take a trade on this if we can reclaim that level. So hopefully that can get me back what I lost on Euro NCD.
I really like NCD Cat. Just because you mentioned it, I took a look at it. I like it a lot. There's that immediate retest on the daily. Let me go ahead, show it. You have you have the immediate retest on the daily order block, and if you go to the H4, the next order block, the next time frame, you will see that there's an outside bar, which hasn't been tapped into yet. But if it does get to touch that, I would that would be an entry order block on the H4. So
down here,
when it on the I will show you my screen. This is NCD Cat. What we see here is a fresh order block on the daily being retested. I didn't mention this, but you do have a bullish market structure, right? See how it is making higher highs. So that you got your bias already. You got the making swing points with the proper market structures. And we have a daily order block that was formed Friday. We're today testing it. So that already, if I want to catch or continue with this bullish market structure, this is the area I'm interested in buying on this time frame. And you could build a system around it just by buying. You gotta think up of a structure or a trigger, where you don't look to the lower time frames, you just look to the daily, and you enter either when it gets to some OHLC data point of the earlier candles, and you enter and you target whatever that your data tells you is profitable. So you do have to do your homework about it. But that's just trading the daily order block. But this is the area that I'm interested in. So if you go to the 4 hour, you see that outside bar. See that outside bar in this price feed? It wasn't a has the same color, but the second bar is outside. The range of the second bar is outside the range of the first one. So that makes it an outside bar. And in my case, my order block
would be... Is that an outside bar? The one that you're marking out right now?
Yes.
But shouldn't the higher wick be also... Why is that an outside bar again?
That's a good point. Okay, so an outside bar, at least in the definition that I use, is this, which is, let's see. Actually, it's not about the definition of I use. The definition of the outside bar is that we have one. Let me make this bigger. Let me use other color. So you have, this is the high and the low of this, the first candle, right? So this is the first candle. That first candle, you have the range, the high and the low. And you have the following candle takes out both side of the ranges and closes outside of it. So
So I thought you meant that the first candle was the outside bar, but it's the second one that's the actual outside bar.
It's the second one. Yeah, it's the second one. Yeah. So this is the outside bar, and you could, of course, you would have in there you go. You do have a bullish engulfing as well, right? which wasn't invalidated by this bigger candle. But if you give me the choice between choosing the bullish engulfing or the outside bar, I would just I would choose the outside bar, because I know that these are much better for price to react on. So I would have this order block, and as you can see, this is a great example of an outside bar that isn't an engulfing. Right? We talk a lot about engulfings being important for the
Right,
trading.
that's
Yes,
right. That's because I always think like
engulfing.
it's almost the same thing, but that makes a lot of sense. Yeah.
Yeah, because what basically what happens is with the psychology of the traders is the following. I think this, when you think about this, then it becomes clearer why this is as important, if not more important, than the other ones. Because everyone who participated in this candle, whatever time frame that was 4 hours, so it's an H4. For 4 hours, everyone here got convinced that the price was going higher, and in the following section, everyone who, when this low broke, they thought they were wrong, and either they got out, they got stopped out, or the sellers came in. And so here is where they would have gotten in, the sellers, thinking that thing has changed, price is going lower, and as soon as it comes back above that low, they start feeling the pain. They are trap traders, and more so when it closes up, they for sure know that they are on the wrong side of the market, right? They're offside, and they need to close their position. So you see that they will be closing, so price tends to keep on going. But that's the same psychology basically with the engulfings as well. It's only with two candles which are the same color. So if you only look for engulfings, you will miss this one, while this is as powerful, if not more powerful than because it's an outside bar, it's more powerful than an engulfing. So this is the area that I would be let me take that off. It is an outside bar, and this is the area then where the buyers will be interested, coming back to defend that impulse. So what I would expect is price having some kind of reaction from that structure when it gets there. Doesn't happen all the time, but if you take 10 examples, 20 examples of price action like this, you will see that a lot of the time it will have some kind of reaction. And if this aligns with the rest of price action from before, it might be the place where it just continues to go going forward. Right, so that might be where it continues its trajectory that it's already had, which was a bullish market structure. So this place is great for if you're trading Kiwi Cat to look for that reversal, or you could call it continuation, as price is coming back to retest that consolidation area, and it continues with its bigger time frame market structure. But it hasn't happened yet, so we could be waiting for this order block. And if we go to lower time frames, you can further align or identify where do we have that same structure. You can find my the quasis that I use. That would be I believe that is the low, and it breaks the neckline and it comes back, and you can look for all kinds of tools beyond the 50% retracement and find some order blocks in this area where you can identify the likely place where, if it is going to reverse, where it's most likely to do it at. But I like it a lot.
Okay, I'm just putting in orders here for a trade, so that's why I'm a bit quiet.
No problem. If let me do that. The proper let me see. This is, you could do it from here. Doesn't really matter, but let me do that the way I just did it. Right, you have the minimum, which is a lower low and a lower high, to have an established trend, and then it breaks the neckline. That would be the neckline in that case. It goes, make this high, and comes back to some structure in here, presumably to continue its way up, right? So the TP, the first TP based on that single structure, is this high or something close to this high, some structure, relevant structure. I'm getting, there we go. That would be the TP for this structure. and you could, we already have the area of interest on the H4, which is that order block that I just showed you guys here, this order block, right? So, but we can refine that further. If we go to the H2, do we find any order block that is present? And let's get the fib tool to find where this fib tool is only confirmed, but we were already be able to see that all of this price action, anything we find in this area will most likely be beyond the 50% retracement, right? Visually, that's already very clear to see. So if we identify the order blocks on the H2, that could be this one. And if we go, I don't see any other, so we can go and check there is one, of course, where the H4 is, but it's not necessary to put on the same structure. And on the H1, I have one here, which I would expand to this area. And let me get that. What else do I have? There is one here which has not been invalidated. So I'm very interested in this area, even though it at the moments of spiked in volatility as some kind of news this was probably came out, right? This wick, it did violate this order block, but it was never able to close below it. So this is still, to me, a relevant area where you could be looking for some reaction. This is the H1.
Victor, could I just interrupt you for a minute here? I want to
Sure.
I want to show you something. So yeah, remember the long I was in, and then I told you guys how we had a bullish a 4-hour bearish candle right here, a bearish engulfing candle on what I believe to be a resistance area by marking out this level right here. And so we saw a lot of weakness in the euro. Most of the euro pairs were moving lower, and because of the fact, so this is something I've started thinking about, and where I got this from is reading. I remember reading the Market Wizards series, right? And by the way, guys, if you haven't read Market Wizards, it's a book. It's a series of book by Mark Swagger, I believe. And there's a lot of different books. Like, you have the original books, and then you have new Market Wizards. Like, read them all. They're really, really good. And in there's a few traders saying, like, the good traders, they know when to cut a position, but the best traders, they know when to reverse that position. Because here's the thing: if you're long and your long gets invalidated, a lot of times you'll see price go down. A lot of times you'll see price go in the opposite direction. Okay, and if you're able to see that movement, you're able to short that movement. That's really good. Yeah, we're actually 1 hour. So what we're gonna do, we're gonna take a 10-minute break because I need some coffee. But then when we come back, I want to talk about this. So basically what I did was I flipped short here, and there's a couple of reasons for this. Not only because of what I talked about with the Market Wizards series, but also because of I might have made a mistake going long. Okay, and a lot of times people, they get stuck with the idea. And it's truly something powerful. Yeah, exactly. And it's truly something powerful when you as a trader are able to instantly flip that bias because of what price action is doing. All right, guys, coffee, and we'll be back in 10 minutes.
Great. I will break down.
All right,
We're
we are
back.
back.
How was the coffee?
The coffee's right here, and I haven't tasted it yet, but I'm sure it's
Nice.
delicious.
I looked it up. The question we had on the brick and the reserve currency of the world got me thinking a little bit further. And I went on to look for Ray Dalio's principle, the book about
Oh, that's a
the
good one.
rise and fall of the civilization. And I checked the in according to Ray Dalio,
You
the
read it. You read it in 10 minutes.
no, but I've read it already. So
Read it. Yeah.
I need just to looked up a couple of things since that question was impromptu. The according to Ray Dalio, who studied different civilization becoming superpower and maintaining that status for a couple of for during for a certain duration, according to Ray, the typical time or period, the average time that the superpower holds that position is between 100 and 150 years. Of course, I think he is mentioning like recent ones, not like the Romans, because I think with the Romans maybe that was different. But we have superpowers, a number of superpowers we have had in last couple of few hundred years, 100 and 150. And if you think that the USA is typically considered superpower after the Second World War, right? So after 1945, right? So less than 100 years. So in 2045, it will be 100 years. So that would give you some kind of time frame what we're talking about. So it's according to Ray, if we apply that 100 to 150 years each superpower, that means that the USA might only hold the superpower position until between 2045 plus another 50 years, so 2095, right? So we're talking about what is it, between 25 and 70 years, according to Ray, right? So that gives you some kind of perspective whether you should take it into account on your daily trading, your swing trading. It probably isn't. It's not going to change anything for the coming years and even decades. But it is something. It is real. It is something that is likely to happen. And if the history is any guide, it will definitely happen at some point. But the time frame, it's not
crazy to
something.
think about it. It's I mean it's crazy to think about how the world is changing around us, and how the world is going to look at that time. And we also have we have the rise of AI. Like, it's the world at that time is going to be so incredibly different to what we have right now. It's yeah,
Yeah, I think
crazy.
it's a great subject because it put things into perspective, right? We've been born and raised having the USA as the only superpower, and we don't know anything different until you look at history and see, well, that was the case a lot of times, but it's always another one. So they don't keep that status for the rest, forever. And with each superpower being in that position, their currency becomes the reserve currency. So the fact that the dollar that's a fact because the USA is the superpower of current times, which will not be the same for eternity. So I think it's a great subject, and you could use it in terms of well, understanding of how the world works, and the bigger trends happening in. We're talking time frames of 100 to 150 years, so it's not very relevant to your scalping the seconds. But it is
Well, if you go
something
to the
real.
yearly, we do see that yeah, maybe we'll be able to imagine if we have like hundreds of years of price data here. That would be pretty cool. Well, we do have. Ooh, we do have all the way from, really?
I think we have
That's
I haven't checked this.
1933 on gold. That's nah, it can't be really. Huh.
I haven't checked on gold, but I think well, not on the price feeds we typically have, but I mean, there is the data exists on the Dow all the way from the
Okay,
beginning.
while you do that, I will look that up. I'll see if I can find that on TradingView. Maybe you can do a quick look at gold, because
Yeah,
we do have someone in the comment here asking about your view
yes.
on gold. He doesn't care about my view on gold, so let's take a look at gold.
But yeah, before we get to gold, I was going to let me show my screen. I was going to break down the Kiwi Cat we were just talking about, and I was let me put my screen on. So I will, while you're looking that up, Jonathan, how far back the price feed of anything goes historically. Okay, so what I see is, I just mentioned, right? We have a daily order block that is being retested, and within that daily order block, we can find or identify an H4, which to me is the logical step down increment in time frame. So you have the H4, and then my question is, okay, I have two time frames aligned. Can I refine this further? And most of the time I can, but not always, right? If I can't, then that means in my case that I don't trade it. But if I can find alignment going to lower time frames, then I will be able to trade it, because to me, the more alignment you have, the more likely that structure, in this case an order block, will be respected and price will react on it. Not all the time, but it is more likely. It's a matter of probability. So I have this order block. So what I'm going to be looking for is structures within this H4 on the lower time frames, right? And this I was doing right before we went to the pause, so the break. I found we have one H1 here, and we do have another one. Both of them, as you can see, are within that H4. So to me, those two, we have the H1, H4 within the daily, and we have another one here, which is the H2. And that's why I indicated here, as you can see, I have indicated where is the area, right? This is based on the H2, which starts here and goes all the way down there. In this area of the H2, there is no H4 overlap. So I want to only trade those structures with overlap, because the idea is, of course, what I just mentioned, that it has multiple time frames telling you that that's a good area. The same thing with this H1. I'm not interested in it because it only has the H1. It does not have the H4 overlapping it, right? So doesn't mean you cannot trade it. Price will still, at certain scenarios, will still react only to this order block, right? But it doesn't have the multiple alignment that I look for in order to increase my win rate. So what I do is then I identify the areas that have the H1 and or H1 and H2 plus the H4, and then I come up with two areas of interest. So those are the areas that I want to be trading. And the beauty of this is, and I've mentioned this last week, that if I get an entry here, right, this is a pair I don't trade, but it doesn't matter. If I get an entry here, not only do I have an entry with the hourlies, but I also have an entry on the dailies. So it makes sense. This is a trade that I can upgrade to the higher time frames, and I can go to the daily order block, the daily time frame, and ask myself, what is the relevant structure above us on the daily, not on the hourly, but on the daily. On the hourly, in my case, the structure is, right, it's the previous high, right? So if this is, the assumption is this is going to continue, this is going to continue to have a bullish order block, bullish order structure, market structure, right? It's going to continue with this higher highs and higher lows. And if that is the case, it will inevitably have to take out this high, right? So my assumption is it's going to continue. I'm trading. This aspect is just trend following, right? You're following the same trend that it is already in. So if it's going to continue that trend, it's going to inevitably going to be taking this high. So that will be the first area based on the hourlies. And on the dailies, there are some structures in behind, not behind, to the left, but they have this is a mitigated already, a mitigated order block. So that could be a structure, but it is within the earlier structure that identified by the hourlies, and above that I don't have anything. So in this case, there isn't much I can upgrade it to. So I'm still stuck with either that high or this whole order block, which on the daily also makes sense for me to target. If it's going to leave one daily order block, it's going to go to the relevant, in this case, the daily on the in the opposite direction. I didn't check the weekly, and that does not help me. So there's nothing there I can use. So basically, in this specific scenario or this specific pair, this setup, looking at the daily doesn't help me much because I already have that high as the target. So basically, I would try to do this, try to enter, look for the lower time frames to spot my reversal patterns, and I would have my stop below the relevant structure, right? The relevant structure, of course, is that structure which it is now, not now, but then reacting from, and target either this structure, either whatever time frame you want, or lastly the whole structure. That would be something that I would be interested in trading. This is only 1.6 pips, which is not realistic on many pairs. On a Kiwi Cat, I think it's still too tight to trade on. But let's say 5-10 pips, it doesn't matter. You can still take this trade and have a very, very nice risk reward for it. If it helps me on the lower time frame, if it forms those reversal patterns, and what I need to see in the market before I get in. But I did find these two structures as where I would be wanting to enter, that one and this one. Those are the ones, in my opinion, have the best opportunities or best probabilities of being these structures that will be changing the direction of price. Were you able to find the gold? I'm going to get to gold in the meantime. As you're looking for, let's look at gold. All right. So, okay, what do we have? On gold, we haven't finished the monthly candles since the last time we traded gold or looked at gold. But there's nothing different here. There's the current candle is just continuing what we have been seeing in the past. The weekly, we had a kind of indecision candle going with this. But if you consider what we had previously is, the body indicating that indecision, right? The body is small. However, you can see the pattern, what it's doing, right? It's having impulsive move, and then and previously it was two candles of smaller compressed price action for the whole week, right? So the body is compressed. Then you have one big candle, another compressed one. Just looking at the bodies, not the wicks. And we had another one here, impulsive move. And what do we have? We have another compressed. So you see that pattern where it's expanding and consolidating, expanding, consolidating. So that's the first thing that comes to mind. And if that pattern will continue to go, that means that either this week or the next week, we will have probably another expansion again, right? So that looks good. So we might have opportunities for gold here. Okay. We are making the breaking all-time high last week. We broke it again. And that is in itself is a very important place where we could be looking, we should be looking for price to go retest and see how it behaves as it is breaking it, if it's going to continue or not. That's on the weekly. The daily, what do we find on the daily? Okay, we are in bullish order block, bullish order flow. We have been for some time now, and after that consolidation we had here with gold making a higher low, right? Making that higher low, and that higher low was confirmed when price took out this high, which was the last high, not the swing high, but the last relevant high on the higher time frame, which was this. I'm having some difficulty with these tools, but all right. So let's see. This is the higher high. Once it breaks this high, that forms this to be the higher low because I take 2 bars on each side of the swing point. If you have the same rule, then this would be the higher low and the structural low to be broken. But we have what else do we see? So that's bullish. We have not have we do we have a bullish engulfing? Yes, we do. At least in this price feed, we do. This is the daily. So this is a big area where price could come back and has already come back for an immediate retest today, and it has reacted from. So that's a very nice. I'm not sure if it gave us any reason to get in on gold. What I'm referring to is that wick. Let me get this straight. This wick right there, as it is coming, formed the order block and comes back and retests for a little bit, just a little wick there. Let's go back to the to any order blocks. What do I see? It's to begin with, there's no slowing down visible in price action. That's one thing to be mindful of. The other thing we have is I do see a reversal quasi, a bearish quasi on the H4. So this is the H4 quasi, and the entry order block would be, let me get the structure, but mind you, this is against the bigger time frame. So if you have a signal here, you better not take this for very long. That's the area, and it had that's one entry order block. It had no issue breaking it. It's an H4 entry. It had no issue breaking it. That's one thing. And you also have an H4 here. That would be the last order block in this quasi. This is against the higher time frame, right? So if it signals, in my book, in my strategy, I still take it. However, I don't want to be against the daily. And this one is against the daily. The order block is right there. So it's likely price could retest and then continue. And if that is going to be the case, who will win? The H4 or the day one? The daily. The daily will probably win most of the time. So that's a position I don't want to be in. So if it triggers, I would trade it, but I will be, very careful in not leaving this too long on. Maybe just until the end of the day, as long as it's forming those bearish structures. So that's a reversal pattern I have here. We're currently in that H4 order block. So that makes me think, okay, we have an H4 reversal pattern. Do we have the lower time frame alignment? Right? I'm letting go right now for the bullish scenario. But well, before I go to the bearish scenario, let's finish continuing with the daily order block, which I saw before. We do have this structure, right? So that's the quasi as well. If price comes back, this is the bullish scenario with the daily bias on my side. I have this structure below us where I would be interested for a long, which is this, right? This is a entry long on H4. This is with the daily bias, right? The daily bias formed by the daily order block that is being retested. This is where I would be able to enter. Let me put on this is the neckline, and the wick, not the wick, the fib is from that low to that high. So anything below that 50% retracement, and this is a valid entry to me, or an area. This is where this is one scenario. for the bullish scenario, right? This has daily order block or daily bias to it, so I like taking this. I prefer this above the bearish side, but the other one is, if it forms and if it signals, in my book, I still take it. I just have to be aware that it is against the daily order block, so I don't want to keep it very long. So this is the area. So I have, let me take this out. I have this as the possible area to go taking a short, right? That's the daily, the hourly, and this is based on that. So that is the area of interest for the reversal, for the bearish, right? This is the area where I would be looking for the lower time frames for the reversal, and this is the buy area for gold, to me, at least using the daily and the H4. If I go to the lower time frames, of course, I will need to adjust those areas of interest. So there's, which is all, a lot of the times there are two sides of two possibilities for the market, right? If it's going to go up, it's likely to use this structure, and if it's going to reverse, it's likely to be reversing from that structure. So basically that's my view on gold. Hamid is asking a very good question here. Let me see. It says there is more fresh ones. I'm not sure which order blocks you refer to, Hamid. Are you thinking about the? Oh, you mean this one? Oh, I see. Yes, I see that too. Yes, I see that. This order block is, well, Hamid, very good, very good. There is a fresh order block there, and yes, I would trade it as long as it's still fresh. This order block, the lower one, right? This one. It doesn't matter if it's fresh or not, because I'm not trading it because of the freshness of the order block, but because of the quasi. So different setups, but very, very sharp of you to notice that there is an order block here. And if I trade this, it is not because of the quasi, just because that there's a fresh order block. So yes, you are right. This is a valid entry as well, if it does that, as long as it satisfies the criteria of a fresh order block. So this is time sensitive. If it no longer is fresh, then this order block will automatically expire as a setup for me. Let me get this, right? So this order block is time sensitive. These are not time sensitive. So, but very good. Hamid is on the spot with this. I like it when we have viewers helping us out. Great stuff.
Yeah, definitely. I think it's pretty cool.
All right. So if let me continue with what Hamid, the structure with that, because the other structures, well, this one is the bearish structure, we are currently in it, and the bullish structure below us, we're quite far from it. Right, so it's not this one is not as relevant as perhaps this one for a bullish continuation. So if I go to the lower time frames, I don't have anything on the H2, and I do have a little order block there on the H1. So that would be where I would change this to that structure. And now you see how selective the area becomes. We're only talking about, what is this, about $1 of difference, right? So unless it gets to that area, I don't look at it. I don't worry, to look for any entries. It has to get into that area, and then I go to the lower time frames to catch my entry, right? So I use that refinement, and I become selective with what I want to trade. And of course, you're going to be missing a lot of entries because it doesn't get there all the time. Doesn't matter. But I get selective, and it helps me become a better trader. And that's what we all should be focused on. Yes, you were going to say something, Jonathan.
No, I can't really remember what I was going to say, but I've kind of forgot to trade EU here. I've been last week. I started trading EU there on the lower time frames, and I remember that I kind of forgot about that. But I did take a look at EU, and I can't really find anything interesting. So maybe it's best not to trade that today. Did you take a look at EU?
Did I?
I don't think so. I think
No,
it's
I
in
didn't.
a it's
No, I looked
it's
at
in
Kiwi
an
Cat.
it's in an interesting area. I can't really. I feel like it's at high time frame resistance, and to me, kind of makes no sense to long this area. But it does feel like the market is very bullish here. There's very strong moves to the upside, but also feels like yes, the question about ICT. That's right. Yes. No. So I had a question about a couple of weeks ago. I talked about how I wanted to learn more about ICT and see how I could integrate that into my own trading. And I have actually gone to ICT's YouTube channel. I've also just quickly went through a couple of courses on ICT, and yeah, it's what I figured out. It's just a lot of the things that. So to someone who's just coming into trading and they're getting into ICT, I can understand how it's like feels like it's something unique, but there's not a lot of things you can do with technical analysis. There's a lot of you can like Victor can talk about the Quasimodo pattern. He can talk about different candles, right? And I might talk about that as market structure, and when he talks about neckline and break of neckline, I'll talk about that as a break of market structure and break and retest and things like that. So basically, most people I figured out is trading the same things. We're all trading price action, and a lot of times it's just different words for the same things. So yeah, it's I don't think it's gonna help me. I don't think ICT trading ICT will help me a bit, because it's basically what I'm already doing, but different words and different techniques. But like the OTE, that's basically the reload zone. A fair value gap is when you leave a gap like that and gets retested, it's usually a break and retest. And if it's a retest of a fair value gap in the OTE, well, that's a break and retest of inside the reload zone. So it's basically the same thing that I'm already doing. I prefer to do it my way, because then I can be completely discretionary with that, and I don't have to really follow any. Like I can follow. I'd rather just follow my own system, and it makes sense to me. But I'm not saying ICT is not profitable. Okay, I'm not saying it's not profitable trading ICT, because we have a lot of funded traders who trade ICT and they are quite profitable. What I'm saying is there's nothing special about ICT, and there's nothing special about my way of trading. There's nothing special about Victor's way of trading. There's just nothing special about a specific trading system. What is special though is you, and you have to have a trading system that caters to your personality, because we all have our different unique edges. You'll see people, they start with ICT and then they start trading ICT, but they'll tweak it somehow. They will choose a specific model, and then they will backtest that, and they will see that they can tweak that in a way. So it's not about the system. It's not about trading ICT or not trading ICT. It's more about finding what works for you. ICT, it might work for me, but it doesn't make any sense to me. So no, I've kind of stopped that journey, if I'm going to be honest.
I was smiling behind this mask when you were talking. You said something about there's nothing new. It's all the same. There's nothing special here. Nothing special there, and it reminded me. Wasn't it? I think I don't know, my history isn't that sharp perhaps, but wasn't it like 3,000 years ago or 4,000 years ago, King Solomon said, there's nothing new under the sun.
Right. Yeah,
It's
that's
it
true.
sounded it sounded you're saying something that some ancient guy already told us thousands of years ago. Nothing now new under the sun. It's all the same, different package, but it's all the same.
Yeah, I mean, just give me a second.
Sure.
Yeah, so I mean,
Well.
technical. I mean, we're talking about technical analysis, right?
Mhm.
And if you look at candlestick formations, for example, I mean that was developed long way ago in the Japanese rice markets, right? And people develop a way
Mhm.
to track the price of rice, and that's where the Japanese candlesticks comes from. And when you look at like Dow Jones, which according to many is the father of modern technical analysis, that's from the beginning of the 1900s. Quite a long time ago, and he developed the Dow theory. Well, he didn't develop the Dow theory, but people reading his newsletter, which then turned into the I think the Wall Street Journal. Um, People reading that newsletter created the Dow theory, and it has really you know been standing the test of time, and the Dow theory holds true till today. And what I'm saying is, like, ICT might be great for a lot of people, but it's still using the same foundations that the all the way back in that Charles Dow used. The thing with ICT though is he talks about an algorithm that controls price. Now, obviously, there was no algorithm that controlled price back when Charles Dow wrote about the markets. And the question is there a the one algorithm that controls everything? And if you decipher that algorithm, you'll be able to predict where price is going. Yeah, that doesn't make a lot of sense to me. I don't think that makes a lot of sense. And that's the part of ICT that I think has taken a whole new life of its own. And I feel like that is not trading. That's not technical analysis. That's something else. And that's, I think, one of the reasons why I'm a little bit hesitant when it comes to ICT. However, the concept that he's talking about with OTE and the different models that you have with silver bullets and FVGs and things like that, it works. It does work. And let me tell you why it works. Because it's technical analysis. And if you take a specific technical analysis concept or pattern, and then you try to stay consistent with your approach. And so, first of all, you have to have an edge. Like, you always have to have an edge. But if you find a pattern in the market and you backtest that, and you see that there's a certain probability of one thing happening over the other at a specific percentage of the time, and you'll calculate that you'll be able to make a certain amount of money when you're winning. If you're able to do that consistently, it doesn't matter what system you're using or what pattern you're using, as long as they're edge. And there's so many different ways of doing technical analysis, and there's thousands, if not tens or hundreds of thousands of ways of being profitable with technical analysis. But it's important to remember where it all started and what's the foundations and the basics of technical analysis. And if you think about that, then you can look at Elliott wave theory. You can look at Dow Jones theory. You can look at WD Gann, which had some outlandish ideas about the market. But if you pick one and you stay consistent with that, you'll probably be consistent as a trader. But I think it's dangerous to think about the markets and technical analysis as something more than just technical analysis, because I guess that's a whole nother
Subject.
conversation. But it's stick to TA, stick to price, and you'll do good. When you start finding different reasons for the markets to move, we're not talking about technical analysis anymore. Yeah.
Hamid is on the spot. We were not trading gold today, but gold had a very nice signal. Had we been trading gold, those are the areas where I would have been shorting it, and it would have been a great trade. Too bad today is not gold trading day for our live
Wait,
stream.
but you would be like that analysis is not only based on the 1 minute, right?
No, of course not. I
But
never do that.
the reason why I'm asking that is that level, dude, like we have to break down your systems like in detail again, because I don't really get it, because the level has already, on the 1 minute, it's been tested so many times. If you go to 1 minute, like, why? It's
Why would you
already
be
been
entering
tested
here?
so many times.
Yeah. The thing is, these entries are not based on a fresh order block, so it can test it all at once. It's still valid to be entering from that area as long as hasn't been invalidated. You can still trade it. But
Okay.
that's with the quasi. If you enter on the fresh order block, then it needs to still be fresh, right? That's why the setup is called fresh order block. It needs to be fresh. And there's a certain point, which I don't say when it starts becoming stale or it's not fresh anymore, but there's a certain moment where you can't be trading it anymore because it's no longer fresh. And in this case, we had 3 order blocks as price formed the quasi. And the first one, it did not react to it, but it did not signal, so you wouldn't have lost anything. And the second one, you had 1, 2, 3, 4, 5 different places, many times to get into the market, and it respected that order block beautifully. I mean, there was one here, 1 pip or 2 that it went beyond it. But you can see all the time you get in on the 1 minute, it respected this order block nicely, was not able to close above it. And this was the order block eventually that turned price around and it goes the other way. So, but we were not trading gold today as live trading. So and this is not the pair that I trade on my, I focus on EU and GU. But this is the next one that if I'm going to expand, like consistently expand, not only on Wednesday for our live stream for our audience, this would be the next candidate to expand to.
And
And
that's ballsy.
Hamid,
Like I never gold for me that's my nemesis. I think the day I start trading gold is the day I don't need money. I think.
and this time around, I have a stop loss of $1, but I would argue I will have to optimize that stop. This is just randomly put at 1, and you could, if you have a 1 hourly structure, right, which was the entry for that, what was the trigger for that entry, right? You could target a 1 hour on the opposite direction, or at least the H4 on the opposite direction. If that is in doing so, you could have your TP, and of course you have to, right, all the way to that order block, that H4 order block. You assume that they will be getting into that order block, and they'll give you 1 to 13 almost. But I mean, you have to test this out with your own data, with your own entries, with your own structures, and so on. But that's basically the same strategy, just applied to gold, which I don't focus on every day all the time. But it doesn't matter, and you can see how it reacts once it starts going. At least on the it's clearly that was the structure. Look at price action. It's clearly this is the structure on the 1 minute that moved price. And your job, or at least in my my way of trading, approaching the market, is to identify and you will not be able to identify the single one that will be doing it, because that's, crystal ball activity. I don't know which one it will be, but my job is to minimize, to eliminate as much as possible, that I end up with just 1, 2, or 3 areas where it's likely to react, and it still gets me out more often than not. I have a lower than 50% win rate. Doesn't matter. I just get one of them, and for each signal, I win. In this case, I would have won something like 13 or less or more, depending on how I structured the setup. There you go. And you can see how it's going straight to that order block. At least that's what it looks to be doing, right? The 4-hour order block. And we'll have to see how it reacts. And you can look at the on the H2. This was also very nice. If I take this off, you can see that on the H2, it seems, right? This is not coincidence that as soon as it reached that H2 order block, which is not a valid entry order block to me, and it's not fresh anymore. But as soon as it reaches it, you can see it leaves wicks behind. Right? He signed a little wick. It's not a lot, but it's unable to penetrate any further. Right? See if you see that. Those are signs that you will start reading into the market as you see this so often, that you start seeing them. Hamed says, I'm testing Victor's system on gold for a while. It actually works. Good for you, Hamed.
Yeah, I like that it actually works.
Good for you, because I've been trading this way. This is how I'm profitable, and I'm sharing it. We are sharing this for you, for everyone who wants to, put on the time. There you go. It would have hit TP right now, hitting that order block, and
Nice.
you would be out. So yeah, I know a lot of strategies work. You have to find. You have to make it work for you, right? Because the way I trade, if you put 100 people trading my system, they're not all going to be successful. They're not all going to be profitable, because you need to adapt that system to you, the concept to you, to the way you are, to your personality, the available time you have, to your patience and everything else, because you're going to be executing it. But the system itself is profitable. Can be profitable in the hands of anyone if you apply it correctly. And
yes, definitely.
And that holds true for a lot of strategies. ICT, non-ICT, swing, the RLZ, your strategy, Jonathan. I mean, it depends. It's a synergy of the strategy, and the trader needs to be, in sync to make things work.
Definitely. All right, guys. I think we're over 2 hours now, and we've had a good session here. Good, lots of good comments from you guys here, and it's really been a joy going through the comments here and helping you guys out. And yeah, I think we had a really good live stream here. Hopefully, I'll be able to start making some money as well. That would be amazing. I'm currently down, I guess, how much? Half an hour, maybe even less than that. But still, I feel like I feel like I don't have the best read today. So what I'm gonna do is I'm gonna take a step back. I'm gonna spend some time with my journal and do some, I don't know.
Reflection.
I think that's the right word. Yeah.
That's always good. Good plan.
Yeah. Take a couple of revenge trades when I'm off camera, maybe something like that.
And reflect on the superpower eroding and losing its currency, the reserve currency position in the next 75 years.
Yeah, I'll plan for that. All right, guys. Thanks for joining here today, and I hope to see you all tomorrow. I believe tomorrow we have Saul back on, so I'm gonna I'm gonna go through, see if I have the time. I'm gonna go through previous sessions we had with him, see if we can get some more information out of him that we haven't gotten already. But yeah, it's gonna be a very, very exciting episode with Saul. Can't wait for that one tomorrow.
All right, guys. As always, my pleasure. It was my pleasure being with you guys. So see you tomorrow. Don't miss and don't forget to hit the like button if you like our session. You like what we think, what we talk about, the things we, if you like the fact that you can write in the chat and we respond to you. You may even form the discussion with the questions you have. If you like that, hit the like button, and so we know that's a format that you appreciate. That said,
Absolutely.
see you guys tomorrow. Bye-bye.
Take care, guys. Bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube